Well, we're getting straight into a look now at the Mozambican markets, and that's with Capranzine Hunguana. He's an asset and liability manager at FNB Mozambique. Thanks so much, Capranzine, for joining us on the line this morning to focus specifically on that overall economic environment over in Mozambique, and then also some of the action that we're seeing on the fixed income side of things. We've had March's inflation numbers come through. It's accelerated to 4.27% year on year from 4.18%. Take us through reaction to that data that's filtered through.
Yes, March inflation figures will be out anytime soon, and I do expect them to remain in the region of 0.15 to 0.2 month on month, which may take the year-on-year inflation up to 4.5%. That's the Mozambican inflation. At the moment, I don't see any exogenous shocks to our inflation in Mozambique. So I expect the inflation rate to be driven by the international prices of the country's main import commodities, maize, rice, and wheat. And on the other hand, there may also be some influence from the Metical value against the dollar and the rand. Over March, the Metical has been stable, which I believe will contribute to a stable or rather low inflation for March.
As you say, no exogenous factors coming to bear, but that risk for slightly rising inflation coming through. 4.5% is your next forecast, Capranzine. What do you see this doing in terms of interest rates and the kind of impact it's said to have on interest rates in the country?
In March, the central bank kept the benchmark interest rate unchanged at 9.5%. And as I predicted earlier, from February up to March, I expect the central bank to maintain the rate flat for a rather prolonged period of up to 6 months. At the moment, I don't think the central bank will cut rates because inflation has hiked at the beginning of the year due to the floods that hit the country. And I don't also believe that the central bank will hike rates because of the damage that it may put to the growth prospects of the country. And as you know, we are going into an election period later this year, up to the last quarter of 2014, when we'll have the general elections in the country. So I don't...
Capranzine, it's in this context that we've had the Mozambican government issuing treasury bonds worth 500 million meticals, and that's the equivalent of $16.2 million US. We've seen the first of the series of that 2013 government bond coming to the fore. Take us through those auction results.
Yes, this auction took place last week, and this is the first time that the government has done a government bond issue based on an auction system. And this follows the changes in legislation that was done at the end of 2012 concerning the primary market access of government bonds. So the main change in the law has been that only registered commercial banks may have access to the primary markets in government bonds. And in fact, some of the banks were asked to request a license from the Ministry of Finance at the start of March in order to have access to go to those government bonds. And the main intention of government when it comes to this change in law is to increase the liquidity of the secondary market. They feel that the banks buying the bonds in the primary markets and holding to them, and maybe selling in the secondary market, or rather promoting their sale in the secondary market, will be much better than having access to all market participants at those issues.